Welcome to Corporate Finance and Accounting Talent 2025 Study Preview, a panel discussion brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council, and before I introduce our partner, sponsor, and moderator, let me share some brief housekeeping items. This webinar is CPE eligible with 4 polling questions, so please answer each poll. And if not seeking CPE, please answer to benchmark your peers. Also regarding CPE, we'll have a quick survey at the end of the presentation, so please complete. Next, we'll have Q&A at the end of the presentation, so use your GoToWebinar control panel to ask our experts questions. And finally, you'll receive a link to this webcast via email in the next 24 hours, so no need for notes or screenshots. Now a word about our partner and sponsor. BILL is a leading financial operations platform for small and mid-sized businesses. BILL automates the future of finance so businesses can thrive. BILL's integrated platform helps businesses to more efficiently control payables, receivables, spend and expense management. Hundreds of thousands of businesses rely on BILL's proprietary member network of millions to pay or get paid faster. Headquartered in San Jose, California, BILL is a trusted partner of leading U.S. financial institutions, accounting firms, and accounting software providers. For more information, visit bill.com. And it is my pleasure today to introduce our moderator, Lindy Antonelli. Lindy?
Thanks, Neil. I'm Lindy Antonelli, partner in our technology practice at Armanino. We're a top 20 accounting and tech consulting firm. And I'm also the board chair of the Controllers Council. On the agenda today, we can go to the next slide. I will first share the study abstract and then introduce our esteemed panelists. Then we'll get right to the results of this year's Corporate Finance and Accounting Talent Study, along with 4 polling questions. Then the magic begins. Our panelists' perspectives on these important F&A talent considerations. Finally, as Neil mentioned, we want audience questions. Please ask, and we will hold a lively Q&A session. So the purpose of the study was to identify how controllers, CFOs, and related executives are managing finance and accounting talent, along with such challenges as talent and skill shortages, hybrid work environments, rapidly changing economic, political, and technology environments, and more. A national survey was conducted by Controllers Council from May to July, 2025, with more than 300 respondents participating across North America.
And Lindy, I'd just like to add that this is also a benchmark study that will reference comparisons and trends from prior years.
Oh, great. That'll be interesting. Well, I'm very pleased to introduce our panelists and subject matter experts, Joy Mbanugo and Germaine Cota. Joy is the CFO at CXAI, a Palo Alto-based enterprise workplace and experience platform that is listed on NASDAQ. Congrats, Joy. Her 20-year career includes CFO at Service Rocket, working in the controllership office at Google, FP&A at BlackRock, and a 12-year tenure at EY. Joy is also a private investor in various funds, including women-led ventures. Joy holds a Juris Doctorate from Cleveland State, Master of Accountancy from Case Western Reserve, and a double or bachelor's degree in accountancy and Black World Studies from Miami University of Ohio. And Germaine Cota, she's SVP Finance and Accounting at San Jose-based BILL. Is Germaine on?
I've got another 9-digit link for you, 791.
Neil, put yourself on mute. Germaine Cota is SVP Finance and Accounting at San Jose-based BILL, a public fintech unicorn with 3,000 employees and publicly listed on the New York Stock Exchange. Prior roles include CAO, Treasurer, and VP Controller at 8x8, US CFO at Mercari, and Assistant Corporate Controller at LinkedIn, and nearly 10 years at EY. Germaine earned a BS in accounting from Santa Clara State and is listed as a CPA in California. welcome Joy and Germaine, and what great talent we have brought today. Okay, yeah, is Joy on and is Germaine on?
I'm here. This is Joy.
Germaine is having some issues with logging in, so we can get started without her. But we're hopeful that she'll be able to log in. And I would just point out that our two extraordinary panelists are both public companies, working with public companies. One small public company on NASDAQ and one large public company on New York Stock Exchange. So
Great.
Let's go.
Well, I would be remiss if I did not mention that we've got some real girl power going today. Sorry about that, Neil.
All right. Thank you.
Okay, want to go to the polling question?
Yes.
Okay, reminder, please answer the polls so that we can benchmark with your peers. Okay, what are your hiring plans for finance and accounting staff for the next 12 months? We'll give you a few seconds to answer. And remember, all your answers are confidential and anonymous. We do thank you in advance for answering because this helps build our benchmarking. Okay, so a few more seconds. Neil's managing the poll there for us. Neil, why don't you let us know when you're ready to go?
Yeah, we're good. So if you miss this one, we got 3 more as well. So let's go ahead and share those results.
Okay.
Maintaining 65%, increasing 23, and reducing 13. So we might come back to that, but it does lead in to our panel question as well. So we might come back to those. So let's do that now. Go ahead, Lindy.
Okay. So this was last year's?
No, this is this year's, yeah.
Oh, this is from the study. Okay, so that's similar to what our respondents answered because they answered 65% for staying the same. And I think the decrease was 13. So we're about the same here as our survey study. So that's really great. I love that. Joy, what do you think about this? What are your hiring predictions?
I think the next 12 months is going to be super interesting and probably a little rocky, right? We're at an inflection point in finance and accounting for a whole host of reasons. On the accounting side, right, I think we've talked about this in another panel, or maybe I'm starting to get all the accounting panels mixed up, but right, we're at this point where we have a lot of the senior partners at accounting firms or senior CPAs starting to retire. And what we used to see, right, like you would have this influx of talent that came in. Both Germaine and I started our careers at EY. And so I started as an intern, and there was always a pretty large intern class. And, you know, you're off to the races trying to race up to partner. But what we're seeing now is those start classes are getting smaller and smaller. And even the desire just to be an accountant is getting less and less, just for a whole host of reasons that we don't have to dive into now. So one, overall, there's just an overall shortage, especially on the accounting side, maybe not as much on the finance side. Finance has always seemed to be a little bit cooler than accounting. I don't have a preference, right? Like I'm like, I don't, you know, my background's accounting. I've also spent a lot of time in finance, but I think it's going to be very interesting. I don't have a controller right now, so I can't say like personally, probably, you know, this is, I'm happy to share this, probably over the next 12 months, I'll be hiring a controller, which is interesting. So it'll probably increase, but I'm shifting and moving around some responsibilities internally. But I think overall, it's just going to be a very interesting and challenging time to hire mainly accounting talent. I think finance will be challenging, but I think the real challenge, and Germaine, let me know what you think. I think the real challenge is going to be on the accounting side.
I think I tend to agree. I also think not only from just the shortage of resources, as you mentioned, Joy, the firms are having hiring challenges. The accounting major I have definitely seen dropped as well. But also, I think with automation, AI entering the picture, I think a lot of companies are very bullish on being able to solve for certain accounting capabilities, finance capabilities through technology.
Yeah,
So
I agree totally too. As a partner here at Armanino, we implement a lot of technology. We implement Bill, for instance, and support our clients on that. We implement Sage Intacct. I'm seeing more and more AI and automation going into these software platforms to increase the productivity and increase automation, and therefore potentially reducing the amount of time that people are spending on accounting teams doing the work.
All right, we're going to drill down a little bit more into this question one and look at the 3-year comparison.
Okay, so we've got 2023, 24, and 25. We see maintaining is actually, continues to go up year over year. Increasing is going down, and decreasing is a little bit up. But I don't know. Germaine, how about your thoughts on this chart here?
I think it makes total sense. I think whether it is a function of companies trying to maintain a certain cost profile, or just the increased leverage of technology, and finding maybe different ways to accomplish the same outcomes. I think the either remaining flat in terms of hiring or decreasing is where I would see the trends going.
Joy, any thoughts here?
no, I completely agree. I think what will be interesting is maybe if you even went back, I'm a bit of a nerd, so I'd like to see this go back 20 years, right? Like, and just maybe looking at the trends, what might be interesting is to look at hiring trends and look at numbers over time. And we probably would see some, right? Like I worked through the recession, the first recession in 2000. So it'd be interesting to see how this also changed with economic times, right? So right now it's economic times are pretty interesting. We don't know what's going to happen with the Fed. We have, things going on at PCAOB. So it's just a very interesting time in economics. It's a very interesting time from a regulatory standpoint. So I think people are also probably just waiting to see what's going to happen because you don't want to overhire and, we run into a recession and then you have to lay people off, which we've seen like rounds and rounds of layoffs. So I think it would be interesting to see the trends, but this isn't surprising to me. And we'll probably even see this change and what if the 70% jumps up to 80% just to kind of remain flat, just given where we are, not just from an AI and automation standpoint, but also where we are from a regulatory and economic environment standpoint.
Yes, all points well taken. Very good, Joy. Thank you, Germaine. Let's go to the second question. So this question is your organization experiencing shortages of finance and accounting and or CPA talent? So 53% answered our survey, no shortage. A third answered yes, minor, and then we've got significant shortage in the 10% category. So any perspectives there, Germaine or Joy?
Yeah, I wouldn't say that there is, I think in traditional sense of CPA talent, I don't know that there's necessarily, I wouldn't call it a shortage. And not to belabor the tech environment we're in even further, but I think there's kind of an evolving view on what type of capabilities a accounting professional really needs. And so I think the shortage may actually come from the newer, non-traditional CPA capabilities, right? So I think the getting individuals in that understand accounting, reconciliation, and your basic gap if you're looking for a staff, for example. I think that's still readily available. I think finding talent that understands how to transform processes using technology in the area of accounting process, that is more challenging, and I think of greater demand now than it has been in the past.
Yeah, I would say so as well. Okay, let's move on to the next question. I'll have